Hello, friends. Today we are going to talk about the small companies. What is small companies? Under Companies Act, certain private companies are classified as a small company and special benefits. So, what is the definitions? A small company means company other than a public company. Paid up share capital does not exceed 4 crore or such a higher amount as may be prescribed, not exceeding 10 crore. Turnover as per profit and loss account of the immediately preceding financial year does not exceed 40 crore or such a higher amount as may be prescribed by not exceeding 100 crores. Means here, the small company definition consists of three categories. One is it is not a public company. Next is paid up share capital. At present, it does not exist 4 crore. Turnover does not exist 40 crores. And what is the minimum and maximum number of members for the small companies? Minimum number of members two, maximum number of members 200, excluding the present and past employee members. This is not only for small company, other than small company also this limit will apply. Companies not included in the small companies categories. What are those companies? There are certain companies are excluded from the purview of the small companies. One is the public company, holding or subsidiary companies, and the Section 8 companies cannot be treated as a small companies. If private company is a holding company and is having a subsidiary, it will not come under the purview of the small company. If the holding company is a subsidiary and also public company is a subsidiary holding company, then also it will not come. Means holding or subsidiary companies will not come under the category of the small companies. Benefits: lesser compliance requirements, no need for cash flow statement in financials, only two board meetings required per year, lower penalties for non-compliance, simplified annual return filings. These are the general benefits for the small companies. This make it easier and cost-effective for entrepreneurs and startups to manage their legal obligations. Because in public limited company there are a lot of restrictions and other things are there. In private companies there is no such restrictions. Even for example, for appointment of the managing director or managerial remunerations is not there is no limit for that. There is no need to get approval from the Ministry of Corporate Affairs. Only we have to file the Form PT14. Board meeting 174. Quorum one third of the total number of directors or two directors, whichever is higher. Even for a private company, this rules applies unless articles have provides higher. Suppose in the articles of association of company prescribes the higher limits, then this it will supersede the Companies Act 2013. General meeting AGM or EGM section 103. Private company quorum is two members personally present unless the articles of association otherwise specify otherwise. For general meeting, the quorum is two members. Here also, the general meeting also article prescribes higher limit, then also it will apply because there are some certain restrictions are there in the there are some restrictions in the joint ventures companies where they may specify that some of the minimum number of members has to attend. Then only it will be the board meetings or AGM or EGM will be valid. The restriction clause they may adopt. Auditor appointment. The auditor appointment board of directors within 30 first the first auditor to be appointed by the board of directors within 30 days of incorporation. The board files members must approve the first auditors within 90 days until conclusion of the first AGM. Subsequent auditors as the first AGM members may appoint the auditors. Tenure. The from the conclusion of the AGM to conclusion of the sixth AGM for a term of 5 years. However, appointment must be ratified every year in the AGM members. Note the Companies Amendment Act 2007 removed the mandatory annual ratification, but many companies still follow it as a good practice. So the rectification is not required because the 2017 amendment has given a filing requirement. 81 has to be filed. Eligibility consent, auditor has to file a written consent and a certificate confirming eligibility under section 141 before appointment. Conclusion. Small companies under the Companies Act 13 are designed to encourage the entrepreneurship while ensuring corporate governance with minimal burden, but timely complying the statutory laws of the Companies Act 2013 will be easier for that without any monetary gain. Thank you very much for watching this.